Join me as I dive deep into the world of Gap stock and put my investing skills to the test. Can I figure out if it's a good investment or not? Gap Incorporated is a major player in the retail industry, with a portfolio of brands that includes Gap, Banana Republic, Old Navy, and Athleta. The company's stock has been a topic of discussion among investors lately, with many wondering if it's a good time to buy or sell. To determine this, we'll need to take a closer look at the challenges Gap is facing in its current financial health. Changes in consumer behavior have significantly impacted the retail sector, and Gap is no exception. Consumers are increasingly shopping online and prioritizing experiences over physical purchases. This shift has forced Gap to adapt its business model to stay competitive. One way the company is doing this is by investing heavily in e-commerce and digital marketing. Another challenge Gap faces is intense competition in the retail sector. The market is saturated with clothing retailers, making it difficult for Gap to stand out. The company has struggled to keep up with faster-paced competitors who are better at understanding and responding to changing consumer trends. To make matters worse, Gap has also faced some internal struggles, including declining sales at some of its brands and difficulties in its supply chain management. These issues have put pressure on the company's stock price. The company has been working to revamp its brands and improve its online presence, which could potentially turn things around. Analyzing Gap's financial health, recent earnings reports show that the company has been experiencing some positive trends. Revenue growth has been steady, and the company has been working to reduce costs and improve profitability. However, market trends in the retail sector are highly unpredictable, and Gap's stock price can fluctuate rapidly. The current market trends affecting Gap stock include the ongoing rise of e-commerce and the increasing popularity of sustainable and eco-friendly clothing. Gap has been making efforts to adapt to these trends, but it's unclear whether these efforts will be enough to drive long-term growth. In terms of valuation, Gap's stock price has been relatively stable in recent months, but some analysts believe it may be undervalued. The company's price-to-earnings ratio is lower than that of some of its competitors, which could make it an attractive option for value investors. A thorough analysis of the data suggests that Gap stock has both potential and risks. Its financial health is improving, but the retail landscape is highly competitive. Considering all the factors, my analysis reveals that Gap stock seems to be undervalued at its current price. The company has a strong brand portfolio, and its efforts to adapt to changing consumer trends are promising. The stock's potential for growth is significant, but it's essential to keep in mind that the retail sector is highly unpredictable. If you're considering investing in Gap stock, it's crucial to do your own research and stay up to date on market trends. Based on the data presented, I believe Gap stock could be a good investment for those looking for a value play. However, it's essential to have a long-term perspective and be prepared for potential volatility. In conclusion, Gap stock offers a compelling investment opportunity, but it's not without risks. We'd love to hear your thoughts on Gap stock, so be sure to comment below with your opinions. If you're interested in seeing how Gap stacks up against another retail giant, check out my video on another retail stock for a comparison.